So OCBC. So I'll explain why not, at least for me, not UOB and DBS. And yep, at the later stage. Same thing, business analysis. Okay, look at the corporate profile. For me, it's always what do they do lah. So down here, you can see that they are into this region, Southeast Asia, Greater China, and they have split into three main business partner: banking, wealth management, insurance. Where do I get all this information? Again, very standard places. I just want to share with you. You go to, of course, their website. And you look under About Us. Okay, so this is where I can get all the information about us. Banking, wealth management. Okay, that's where I get all this information. And usually, okay, there is a investor. Okay, investors. Okay, same thing. Financial results. Okay, I look for the presentation, result presentations. Okay, there are always these presentation slides. Then they will actually talk about this is just the two main places I get all the information: the website About Us, our business, then the presentation slides under their financial results okay, announcement. Okay, so now they are actually into banking, wealth management, and insurance. And what is the growth story? You can see that nothing exciting. So by the way, you can leave it to yourself. What is banking? What is wealth management? It's actually quite interesting. Actually, leave it there. So a lot of times now, it's not just on the earn on the interest. They are actually now focus a lot on fees as well. Okay, fund management fees. Then if they sell unit trust, all these fees. So fees is also quite a significant portion. So initially we thought that banks, they just make the interest difference. Okay, of course they still do, but the fees part has also came up quite nicely. So just to let you know. So in terms of business, if you ask me, nothing spectacular, nothing spectacular. So they are just going to do more of what they have already been doing. Asia Wealth, deeper wealth management capabilities, trade, new economy, so on and so forth. So one thing that caught my attention here is this. Okay, where is it? Okay, invest and develop digital assets and tokenization capabilities and customer proposition. So you can see that the banks are also slowly going to crypto already. Okay, so I think crypto is something you no longer can ignore. So it seems like the banks are DBS, no need to say lah. They're actually the forerunner in this cryptocurrency, and it seems that the rest are actually catching up. Okay, if not, you ask me, it's business as usual for the banks. They don't really need to keep doing different things to grow. Somehow money naturally just go to them. Okay. Okay, the other part that sometimes I do pay attention to is this company announcement. What are some of the things I look at now? Profit warnings, investigation, and share buyback. Like in this case, you can see that, hey, the company are doing quite a bit of share buyback. Share buyback. Okay, so generally speaking, when the companies do share buyback, okay, it's a sign that they themselves are confident of the business. Nothing cast and concrete, is just a signal. If let's say they do share buyback, like in this case, you can see OCBC is also doing some share buyback. Okay, so sometimes I look at here to see whether there are profit warnings, investigation. So again, what is this page? How to get here? Let me just do a very quick demonstration. You go to SGX, securities, okay, company announcement, and look for the company. OCBC, very troublesome one. You have to spell out here. Oversee. Okay. Have to spell out one. Should be the first one. Yeah. Share buyback. Okay, share buyback. Share buyback. So they've been doing quite a bit of share buyback. You can see share buyback, share buyback. Anyway, so this is a sign. Of course, not all the time is good. Sometimes it's profit warnings, profit guidance. All this you have to pay attention to it. There is company announcement. And I do the same thing. I compare with the previous. So you can see that the income actually go up, not very significant, but for banks, that's how they do. And net profit also go up. Okay, so it seems that all their sectors has performed very well for financial year 2021. Okay, the net profit for banking go up. For wealth management, the fees actually go up. So as per what I mentioned, so this is predominantly fee-based. So this one is a combination of fees and interest. So you can see that the fee business is actually went up is actually quite significant. Okay, insurance is actually quite small. Customer loans. Okay, this is the loan amount. Okay, all went up. Okay, does anybody know what is TWNS? Does anybody know what is TWNS? I can't find. So anyway, so there's a TWNS. Okay. Total weight. Oh, thank you so much. Total weighted new sales. Thank you so much. Okay, appreciate that. Appreciate. Okay, good. So it looks quite positive for them. Okay, 2022 outlook. So you can see that they are also quite positive. So well placed to capitalize on growth opportunities. Global economy recover. Okay, so this is what I like about banks at this point in time. When there is inflation, it's also beneficial for them. Why? Because inflation, there's more economic activity. Okay, inflation means what? That's property price. Let's say prices increase. Prices increase is what? Then things are more expensive. More expensive, people have to borrow more money. Okay, and after that, when interest rate go up, and then they also benefit. So it's like inflation also good for them. Interest rate hike also good for them. So that is why bank came into my radar screen. Seems like this is one of the best business to be in right now. Of course, they also do share what are potential headwinds, tapering of stimulus measures, tightening of US monetary fiscal policies, from supply chain, rising energy, higher wages, emergence of new COVID-19, geopolitical and uncertain. So personally, like I said, this one is a place where I also can share my comments. So I think these are the statements they just have to put down something like this. So I am personally not so worried. Okay, of course, the risks are very real. Okay, but at every point in time there are risks. That's what I'm trying to say here. Okay, okay, now a lot of people always ask me, the banks, we cannot do 6 tests, cannot do 6 tests. I think I have actually said it, the 6 tests cannot apply for banks. Okay, why is it so? Because banks, you can see that their financial statements is actually presented a little bit differently. Then a lot of people like to ask me, so how do we actually check the health of the banks? Okay, they actually look at this thing called capital adequacy ratio. As I mentioned, you can only find them in annual reports. You cannot find them like under stock screener or things like that. So capital adequacy ratio. Okay, long story short, okay, again, if you're interested with the actual calculation, you can go Google a little bit more. Okay, so basically it's this number is the percentage of how much cash they keep in the bank versus the loan amount. So if you all can remember the economics lesson, when bank got $1, they can lend out more than $1. They can actually lend out more than $1. Okay, So this is the percentage of how much cash they have versus the loan they actually being extended up. So somehow there's actually this thing called common equity tier one total. Again, don't ask me how to calculate. Okay, if you're interested, you can actually go and Google. I'm not too sure how to calculate myself. And this is the benchmark they have to meet. MAS fully phase in the Basel III capital adequacy ratio. Basel III, if I'm not wrong, is from some Swiss standard. So again, please correct me if I'm wrong. And they are required to meet, okay, for tier one, common equity tier one is 6.5, tier one is 8, and total is 10. Okay, so to pass, this one is 6.5, this one is 8, and this one is 10%. So basically, they pass with flying colors. Okay, so this is the requirement by MAS, and you can see that they way surpass. So in fact, that's why I always say don't have to worry about the 3 banks. So number one, basically this standard is already considered very high globally speaking. You can actually go and compare. Not every country will choose this Basel III standards. And what I understand is MAS has already chosen one of the highest standards globally speaking. And you can see that the banks have superseded by so much. Okay, 6.5 is like 15. Okay, so I like I always say, trust MAS, and the banks are actually quite okay. Also, financial health, I'm not so worried about the banks. Now come to pricing. Okay, I think by now everybody know. So as long as this one go below 1, to me it's no brainer. And of course, I think last month it actually went below 1. So hopefully you all bought something, and if you have done so, you should be quite happy. Okay. And if you ask me, when the dividend yield is more than 4%, is considered still attractive to me. So that's how I look at banks. So price to book below 1, confirm cheap. Okay, to me, confirm cheap to me. Okay, if it's above 1, okay, then I look at dividend yield already. So if it's above 4%, okay, to me, it's actually still considered cheap. If it's 3.5 to 4, I think it's fair. Okay, I may still consider buy when the yield is above 3.5%. Okay, when the yield is below 3.5, it's a little bit expensive for me. So that's how I do valuation. Unfortunately for banks, you can't really do DCF as well. Cannot say you cannot do, but then it's a lot more complicated. You can't really differentiate the debt portion. Okay, so I don't have DCF. So this is how I do valuation for bank. Like I said, once it go below 1, confirm cheap. Above 1, I look at yield. Okay, if the yield above 4%, I think it's still cheap. If it's 3.5 to 4, I think it's fair. Okay, and this is the reason why I chose OCBC between the 3 banks. Okay, if you actually do a quick comparison of the 3 banks, OCBC, okay, so this is 4.25%. Okay, and 1.06. If you look at UOB, okay, it's 1.2 already, and it's of course less than 4. And if you look at DBS, 1.6 and 3.3. Okay, of course, a lot of people see DBS as a growth stock. Then of course, I'm not saying that. Okay, OCBC definitely will, the price will rise faster than their 2. No, again, like I said, end of the day, I'm just talking about acceptance and throwing it away. Okay, I'm not saying which is the best. So DBS has proven to run very well because a lot of people see this as they are more, how should I put it? They are the one that adopt the latest technology the earliest. Okay, that's why people are willing to pay a premium. Okay, but to be play safe, okay, I think I just want to buy something that is still considered the cheapest. So no right or wrong, no right or wrong. I'm just explaining why I actually chose OCBC. Okay, so for all you know, maybe DBS, the price go up a lot faster, a lot higher than OCBC. Sure, you know. If I want to capture that, then I must go and understand why DBS can do so. That means go and really understand what is DBS doing. If not just by pricing, I think it's safer to buy OCBC given that it's cheaper, while the rest is not as cheap. So hopefully you understand my line of thoughts.